Welcome to Bears in Exile. Today is Tuesday, March the 5th, and this is a quick hit on the indexes. And starting right off with the Dow, which made an all-time high today. How about that? Just a amazingly furious day up. And is there more? That is the million-dollar question, right? Is there more? Well, this whole run-up, we've been watching the indicators fight it out with one another. We've been watching all of the secondaries moving up and knowing that when they were finished, things would get bad. But until that time, the bulls have nothing to worry about. Well, it certainly did its job today. We were saying also that if we busted out of the previous high, that the bears would get squished. That's exactly what happened. Dow up 100 and almost 26 points today. Outside the upper Bollinger Band, everything looks pretty high. Well, some things look pretty high. CCI very high. Stochastics finally getting to a really good high. RSI, more room to move. MACD histogram, more room to move. The bullish cross on the MACD itself, and the 14-day RSI moving average continues its move down. Are we finished with the secondary climb? Well, yes and no. No in that, yes, I believe it can go up some more. Absolutely. What I'm talking about no is the possibility for a pause, a small move down. I mean, it's outside of the upper Bollinger Band at all-time highs. Should it go sideways or down to get back inside of it? Yes. In addition to that, we already know that we have negative divergence here in the MACD histogram. It would be so much better if we were able to get yet another lower high on it. To do so, it does need to go up some more. That would just make a really pretty, wonderful structure here. And we don't have that at the moment. Beyond that, negative divergence in the RSI, negative divergence in the stochastics, and no negative divergence in the CCI. So at some point, this is going to be done. I think it has a little more to go, but tomorrow, I think it would be natural for a pause. Maybe it'll just go berserk, and the shorts will be covering insanely, and we'll just get to 14,300. But it should get back inside the upper Bollinger Band soon. So we shall see. I'm going to look at the 60-minute chart. I've been trying to keep these short, but just for fun. What does the 60 look like? Well, the 60 looks pretty fantastic for a pause or slightly down. MACD histogram turning... the MACD histogram with negative divergence, the MACD itself turning, the RSI, negative divergence, trying to get down out of 70, going down on the stochastics, the 14-day RSI moving average is pointing up at this moment. We have a topping area that is starting to work itself off, and the CCI going down as well. The 60-minute looks like it needs a pause or some down. So immediately, I would think a little bit down just to heal the daily, and then away it goes. And hopefully it won't just away it goes anyway, but immediately. But a small pause would be fantastic. Moving on to SPX, and this one did close above this previous high, which we said would be Squeeze City, and now we are definitely in Squeeze City. Now, this one is not as extended as the Dow. It is not outside the upper Bollinger Band. We do have a nice blip in the heat map, but this isn't the end of the world. Everything is moving up. All the secondaries moving up. 14-day RSI moving average moving down. The daily looks fine, and the 60-minute is going to look just like the Dow, which is a nice little pause. Would be nice, but it's not as important on SPX as it is the Dow. And going on to the VIX. How about this? We had the nasty Monday. below the major price consensus level. We said that all of this was bearish, back underneath the long-term moving averages. Bad, 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 bad candle, bad everything. Today gapping down and making a little doji star, which really doesn't mean too much of anything. But we do have a nice blip on the heat map. We do have all of the secondaries for the most part, with the exception of the RSI pointing down. Even the 14-day RSI moving average ticked down today. Very, very bad. But this has had quite a move, and this certainly is a pause candle, which is opposed to what the markets did overall. I mean, yes, it had the gap down. It had no movement after that. So very strange. It should have been a red candle, and it is not. And just to see about the 60-minute time frame, to see if this one is begging for upward movement, we'll be able to tell. Now, at first glance, you're below the moving average here. It is going sideways, which is consolidation normally for a continuation move. So if this were to continue going sideways, then yeah, that would be your pause tomorrow. It does have this gap above us though, and it would be healthier for this to fill out first. I don't know that it's going to. Certainly we have a bottoming area here which is working itself off through time. We do have the secondaries all, well, most of them trying to move up. The MACD going up, the MACD histogram looking like it's going to need a turn. The stochastics going up, the fast already going to be running out of space, and the CCI attempting to go up but not wholeheartedly. So very questionable, doesn't really give us too much to go off of, except that this by itself looks like a pause, maybe a slight down tomorrow for the overall market, and then it'll be out of room and down we go again, which is up for the market. So all of this seems to make sense. I just can't tell if this is going to go up or just continue going down after more sideways or immediately. So that's actually not overly helpful, so sorry about that. Just too much that can't be read out of this. Going on to TNA, and then I'll do a quick look at the volume. TNA. And last night we were saying fantastic that it had finally cleared some previous highs, that we needed to get above this high. It actually gapped above that high and kept on going. This is very good. The question at this moment will be previous high, ceiling. Can we get to it? Absolutely. Can we break it? Maybe. And maybe with a very positive bias. There's all kinds of room to move on the MACD histogram. The MACD is looking for a bullish cross. The RSI is going up, the CCI is going up, the stochastic is going up, only the 14-day RSI moving average is still going down. And we were saying last night that the Dow and the SPX were way ahead of the small caps, TNA, and that since this one had so much more to move, that it could do a catch-up and fuel the rally. Even with the Dow looking like it needs a pause or a down, and the SPX being not as necessarily needing to go down or sideways, this one, on the other hand, definitely looks like it can easily continue to move up, easily, and power the rally. So I do think that that is still correct. And with the amount of room here, yeah, it can easily get to this previous high, and certainly should be able to bust it if it wants to, but I would still like a pause day tomorrow. Going on to volume. Now we know that there's only so much time left here. On balance volume, there is more time than accumulation distribution, but there's only so much time here. On balance volume would seem to indicate that there's more than enough room to bust out the high, make a new high, maybe even get really high. So for the moment, no clear signal on volume that the time is now. Moving on to SPY, see if there's any difference here tonight. And the answer is no. Just burning off the room that's left. There isn't much room left, but it's doing pretty darn good with the room that it's had currently. So once again, no sign here, just a sign that it's close, and I'll continue to keep my eye on it. And that's it. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.